it's not impossible. So in this video, I'm going to show you real numbers, real examples, but despite that, the area has a lot of economic diversity, a steady population growth. Traralgon is the hottest market. Traralgon is really hot. Moy, Morwell, Churchill, the older quality stock is not moving. You can find brick homes like this, a 3-bedroom, 2-bathroom in Horsham at 499,000. We're having 5 to 10 offers on properties. There's a lot of buyers agents, big buyers agents, small buyers agents, all looking to buy for 500,000 in Victoria and still get solid rental yields. It's getting harder, but it's not impossible. So in this video, I'm going to show you real numbers, real examples, and what's actually happening on the ground in 3 regions that you should know about. Hi, my name is Jadu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me, then go to my website, propertyframeworkbuyersagency.com.au, and book a session with me there. In this video, I'm going to talk about 3 regions. So one is the Latrobe Valley, the other one is Mildura, and the third one is Horsham. So 3 Victorian regions where you can still buy property under 500,000 and still get 5% rental yields. So I'm going to share quick economic snapshots, price trends, and some real listings. Plus what to watch out for so that you don't get caught up in the hype. What we're going to actually learn in this video is what the data says about these markets, what's actually happening on the ground when we inspect or negotiate, some example deals and price ranges, and CRE risk and how to manage this risk. The first region I'm going to talk about is the Latrobe Valley region, which is about 90 minutes from Melbourne, right? So the Latrobe Valley, in terms of the economy, it was heavily reliant on coal power stations, right? And some of these stations are going to be closing down. But despite that, the area has a lot of economic diversity, a steady population growth, and there's a lot of investment into renewable energy that's coming into the region. So because of that, the Latrobe Valley would still work as a solid long-term investment. Let's go into this and look at the key towns in the Latrobe Valley. Yeah, let's start off with Moy. So Moy is typically the more rougher part of the Latrobe region. Now the Latrobe Valley consists of 4 major towns. So one is Moy, Mildura, then we have Morwell, and then we have Traralgon, and then we have Churchill just at the bottom here. So these 4 towns make up the Latrobe Valley, and we are not too far away from Melbourne either. So Melbourne is about 90 minutes. So if I just move the mouse, you can see Melbourne is just around here. In fact, Pakenham is here. So we are not too far from Melbourne, right? So these 4 towns make up the Latrobe Valley. Moy is typically considered to be the more rougher part of the Latrobe Valley. Mildura, which is adjacent to it, is the kind of the newer part of Moy and the slightly better area. In Moy, you just have to be a bit more careful. There is a bit of public housing around, so just be careful about the houses. The houses are typically older, but you do have some renovated kind of properties as well. You can find older quality stock here between 300 to 400,000, which could potentially rent at 5% yields. Okay, the next area is Morwell. So Morwell is a fairly big town too. We have the major Mid-Valley shopping center here. The Latrobe Health is just around here. That is the biggest hospital there, or one of the biggest hospitals. And then we have the Latrobe Valley Airport. In terms of Morwell, we do have lower own occupiers just around this region here, just close to the station. There is a bit of public housing and more renters. The more desirable pockets are towards the north of Morwell. So around this region, and then around this region is where most of the owner occupiers like to live. So just have to be very selective of the type of pockets that you want to buy when you're buying in Morwell. Having said that, you can still get good deals in these higher, renter pockets as long as you buy at the right price. Now let's move to the third one, which is Traralgon. Okay, so Traralgon is the biggest city in the Latrobe Valley region. It's got a population of more than 20,000 people. It's the most trendy place, at least in the Latrobe Valley, to live because it's got the cafes, restaurants. It's where the young people want to live. It's where the families want to live. The west side of Traralgon CBD, so this is the Traralgon CBD area. The west side of the CBD area is a more desirable area, and you get better quality homes as well. So if you can buy something around that 500,000 in the west side with a 5% rental yield, you'll be doing quite well. Then we've got the next town, which is Churchill. So let's just go down here. So this is Churchill. Churchill is really known for the university, the Federation University right here. And then just around this region, just below the university, this pocket here, it does have a lot of public housing. So you have to take note of that. The region west of the university around here is a better kind of pocket where you have more own occupiers living here. Right, so Churchill is another region where you could still pick up properties between 300,000 to 400,000. So that's pretty much a summary of the 4 towns. Let's just go through the long term. I want to share the long-term price trends here. Okay, so I've got the 30-year growth data for Moe, Morwell, Traralgon and Churchill here, right? So our prices all the way from 1996 till about 2025. So the annualized growth here, I can see 7.17, 7.72, 7.06 and 6.65 for the 4 regions. So over the 30-year period, all these regions have done fairly well. So 7% or 7.5% per annum, that's really consistent growth. And if you look at the growth profile here, over the 30 years, I don't see any cyclical growth patterns where you see like negative growth or long periods of negative growth or anything like that. I do see a slow and steady growth wave, and then between 2016 to 2022 there was a good price increase and then a bit of a stagnation since then. So a market that is very stable and that has performed well over a long term. So let's just look at the price trend. So this is Moe. So you can see there was a really rapid growth here, and then the market is kind of stagnant now. So Moe is still fairly stagnant. On the ground, I do see good quality properties moving quickly, but the older stock is still accumulating, right? The next one is this is Traralgon. So I do see Traralgon properties moving quickly, and that can be reflected by the price graph here. The last 6 months or so, Traralgon has been moving up. You can see that from the graph, prices are slowly moving up in Traralgon. And the next one is Morwell. So Morwell went through a decline here between 22 25, prices dip, and now it's slowly starting a recovery. So I would say all 3 regions are just starting to recover, but the extent of heat is different for all 3 regions, and that's what I want to cover, right? These areas, Traralgon is the hottest market. Traralgon is really hot. Moe, Morwell, Churchill, the older quality stock is not moving. It's still there, sitting for days sometimes. Once you have something renovated in good condition and under 500,000, that's getting snapped up quickly by buyers agents. Let's kind of see what we have here in, I'm just going to open up realestate.com and just show you something with regards to the quality of the stock. So this is the type of stock which I told you about, which doesn't move fast. So this is 21 Doolan Street in Morwell, 330 through 363,000. If I just click this, you can see that this is a older style home. It's a weatherboard home. Definitely needs a bit of touch up, needs some work on it, right? But it's at a great price. There's a big land component. It's a good price. You just need to factor in some renovations on this property, right? Another example where you can buy something in the 300s is in Morwell. So I'm just going to show you one more in Morwell. So this is 8 Granier Grove in Morwell, listed at 350,000. It's a brick home as well, but it definitely needs some work on it. You will need to repaint it, put in some new flooring and stuff like that. So looking at this property, yes, the bathrooms is very dated. Kitchen looks okay, but yeah, it definitely needs a bit of touch up. It needs a bit of work on it. You just have to be careful with these older stock. There could be asbestos, and then there could be other things that you need to factor in when you're renovating these properties. But I think they do offer really good value, right? The 300, 400,000, there's not much competition. So if you have some money to spend 20, 30 grand, you can buy some really good quality stock. And once the renovation is done on these properties, they're going to sit in the 400s, and you have a market that's going to move up further organically. So you get the equity uplift from the cosmetic reno, and you get organic movement as well. So these are the opportunities that you have in these areas in Moe Morwell. Buy these older quality stock which doesn't have too much competition, try to add value to them, and then get that price uplift and the organic market movement that comes afterward. Now let's look at some better properties. Now some of this is the type of property that buyers agents are competing for. So this one is 32 Wyong Drive in Morwell, 450 to 480,000. This is what a good quality property sells for. Something like this goes within 1 or 2 days, right? So you can see fully done, under 500,000. You'll have a lot of buyers agents competing for this. I think this went closer to the higher end of the range. So in Moe, Morwell and Churchill, the good quality stock is selling fast, but the older stock is staying on the market. Okay, now I want to talk about Traralgon. So Traralgon is definitely a market where things are moving really fast, right? I'm going to show you some examples of pre-market, off-market listings that I have been involved with, and the prices that it went for. So this was 28 Elizabeth Street in Traralgon, was listed around 500 or low 500s, and went for 20 or 30,000 above the asking price. This one is another property. This is 42 Blair Athol Drive in Traralgon. This one was listed at around 519, and I believe this went sold close to the mid 500s, and all of this was competing amongst the buyers agents who are all competing for the same stock pretty much. Let's look at this one, 21 Kristen Close, listed at 497, again went above the asking price within a matter of days. One more property, 15 Current Street, listed at 475. I'm not really sure how much this went for, but again it went above the asking price, right? You get a feel of what's happening in Traralgon. Good quality stock is going pretty fast, and if you're going to buy in Traralgon, this type of stock, you're going to compete with a lot of buyers agents, and therefore you could overpay, and that's one of the risks here. Like buying in a heated market like Traralgon, where there's a lot of investors and buyers agents competing, there's a high risk of overpaying for that property easily by 20, 30K. So I guess the key is like really understand where the market is. Like if you want to secure it, you need to go above to secure it. So the key is to understand how the market is, where it is, and whether it makes sense for you to compete with everyone else and buy these properties. That's Moe, Morwell and Traralgon for you. I guess I gave you a summary of the region and what's happening in the region. You can buy quality stock under 500,000, but expect some competition for the good quality stock. For the stock that is older, that is staying on the market for longer, you can buy that type of stock and renovate it and get equity uplift. Let's move on to the second market. Now, the second one I want to talk to you about is Mildura, where you can buy properties under 500,000. But like Traralgon, Mildura is a super hot market, right? We're having 5 to 10 offers on properties. There's a lot of buyers agents, big buyers agents, small buyers agents, all in Mildura trying to compete for the same property. So just to give you some examples, this is 172 Ontario Avenue in Mildura. I believe this went closer to the higher end of the range, around that 525. I'm not sure of the exact amount it went for, but it was very close to the higher end of the range. Just 6 months ago, a similar property would have sold at 450,000. So you can see the extent of movement in a small town like Mildura because of the investors and buyers agents who are really active here. I'll show you one more example in Mildura. This kind of went under offer recently or sold recently. This sold at 500,000. It was listed on the market between 420 to 450,000. And it sold 50,000 above the upper end of the range because there was so much competition amongst the investors and buyers agents and probably locals as well. And it sold at 50,000 above the higher end of the range. So you can see the heat of the market in a town like Mildura. So yes, you can buy under 500,000. You can get 5% rental yields. But is it really worth it just going here and competing with so many other people and buying these stock by beating all the other offers? That's my question. Is it really worth it? So that's Mildura. I hope that gives you an idea of the heat of the market in Mildura. Now I'm going to move into a third one, which is Horsham, which is a smaller town. Now I've been getting comments about Horsham. So let me just go through a walk through Horsham with you. Horsham is a very small regional town, about 20,000 people. So I've got REM plan here. Yep, so home to 20,000 people. GRP is 3 billion. I see that the GRP has been steadily rising, so that's a good sign. Population movement, not very significant, but at least it's not going down, so it's still healthy. So that's not too bad. In terms of the economic diversification, let's have a look at this. So we have a lot of healthcare, retail, trade, and construction. Let's have a look at the exports. We see that agriculture, forestry, and fishing is about 30%, so a significant portion there. And also electricity, gas, and water and waste services, so another 16%. So roughly around 50% here, 45 to 50% is agriculture, forestry, and fishing, electricity, gas, and water services. So it's still fair level of diversification. It's just that there is a high portion of agriculture, forestry, and fishing, 30%, which is slightly on the higher side. But despite that, I still see numerous other industries, exports here, which means that over the long term, it should still be quite a safe investment. So I don't really see Horsham as a problem here. If you look at the unemployment trends, I'm just going to open up the unemployment. So unemployment is really healthy. It's sitting at 3%. So the job market in Horsham is strong. The economy is fairly diversified for a small town. That looks pretty healthy. The GRP has been increasing, so you could still invest in Horsham. And the reason why Horsham still makes sense is because of the quality of the stock that you can find under 500,000. Let's have a look at the property market data. So I've got hashtag here. I'm just going to quickly run through Horsham here. If I look at the trends here, I can see that there was a period of stagnation. So there was similar to other Victorian markets, Horsham was moving up in value, and then since 2022 there has been a period of stagnation. Over the last 3 years it only did 3%, last 5 years 52%. Now looking at some other metrics here, so I'm looking at the socio-economic score. That's pretty healthy. 70% own occupiers, so it's a market that has a lot of own occupiers. That's pretty good as well. Affordability in the region is very healthy, so just around 22, 23 years, so very, very affordable for the local residents. In terms of the trends, I can see the stock on market slowly starting to reduce. Days on market is somewhat steady, around 30 to 40 days, so it's been a fairly tight market. Even though there was a price stagnation, it's been a fairly tight market throughout, right? I don't see the days on market increasing to 60, 70 days. So it has been fairly tight throughout. Inventory has been kind of steady throughout as well. Now let's look at the rental demand. So sitting at 1%, close to 1%, so very tight rental demand on this market. So in terms of the data, nothing much that stands out here. And in terms of the quality of the stock, what I wanted to share was you can find brick homes like this, a 3-bedroom, 2-bathroom in Horsham at 499,000. Probably will sell just about 500, but you can see that these are good quality brick homes selling under 500,000. Another one at 449,000. One Glancy Street in Horsham. So good quality brick homes. Probably will not be able to get these in other parts, or there are very few areas where you can get something like this for 449,000. So from a value perspective, yes, I can see that based on these houses here, Horsham does stand out. Because you can still find stock under 500,000. The data shows that the market is slowly starting to turn, and once those rate cuts come through, there could be potential demand uplift, which could result in price growth in a market like Horsham. The other good thing is that it's not flooded with a lot of BAs or investors at this stage, so there could be some buying opportunities in markets like Horsham. I guess that's the summary for this video. We just went through 3 different markets. We talked about the heat of these markets, the things that you need to take care when you're buying in these markets. So I hope you found this content useful. If you liked it, please like and subscribe to the channel, and I'll see you in my next video.